For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Short little video talking about trading 1 hour a day using time. Now, we've talked about the weekly templates, day 1, day 2, day 3. We've talked about long trades, short trades, trading ranges. So we have our reversals, false break reversals. We have trend trades, and we have our trading ranges. We have session scalps. We have larger scalable trades, and we have our 5-star golden $1 million trade setups, the ones where we can make an exceptional amount of money. Now, part of the process is being able to identify the best candidates in the sessions that you're trading, which again comes back to whatever instruments you're trading and whatever session you're trading. Some traders like to trade all sessions. Some traders, depending on their location around the globe, may focus mainly on Asia. They may trade the US session, or they may trade London. They may trade 2 sessions. Regardless of that, my key focus is timing. Timing. High a day, low a day. Some trades will be blow-off moves towards the high or low of the week in the beginning of a session, at the beginning of an hour. Other trades may be that middle hour, and the easiest and simplest way to approach those trades when they come up as candidates. So again, I look at, in the Asian session, I will look at the pound and euro yen crosses, the yen and the Aussie yen. I have gold and oil on the side just to look at how their setups behaved into the close. But if I'm trading London, euro, pound yen, euro yen, again, oil, gold, only looking for 1 or 2 of those to offer me a best trade setup. The next easiest thing to do is either be understanding the thesis that I'm either in a trend trade or I'm looking at a reversal opportunity from the high or from the low. The next thing that I pay attention to is the time of day. Now, in some cases, if the market has already broken outside of a previous day's high or low, that first hour potentially may be the trade setup itself. 15-minute false move, and then the reversal begins. But in a normal situation, if I'm targeting New York for oil, gold, or the indexes, or London, most often that middle hour, the equity hour, and this goes for Asia, that middle hour, New York hour, London hour, and that middle hour in the Asian 12 candle window, I am paying specific attention to the end of the first hour and the beginning of the second hour, because I'm planning on that trade being in that hour, which again comes back to understanding how time of day and timing can allow you to focus and grow your trading business based on trading that 1 hour a day. If you have a scalable trade setup, your office hours are to come in and prepare and identify your candidate list. Which pairs are set up for whatever, day 2 high a day sell opportunities, New York, or a low of the week buy opportunity in London, whatever that may be. Trend trade, day 2. Then paying attention to the clock, because at the end of that first hour, they may have already locked in the high or the low. That means that when that new hour starts, I will be in the trade. I will be in that trade now for a minimum of 15 to 30 minutes. But if that trade is a larger move, we could be in a 3-hour move now. 1, 2, 3, 1 hour, 2 hour, 3 hours in the opposite direction. Those are the different scenarios that can take place. But when I'm in a scalp or anything else, when that new hour starts, if I have a trade setup and I'm in the market, that timing of that new hour is critical, because that new hour now is going to be the move. And the easiest way to understand that is to look at your hourly charts and then look at the timing windows when there are setups and understand that once that move begins and you're in that move, if it's a low of the week opportunity or if it's a high of the day trade in Asia or a continuation trade in the London session into New York, or again a high of the day trade opportunity at the end of the London 12 candle window, or if you've missed that and you're trading New York, how trading that 1 hour when your trade setup is in place, time of day can give you a lot of valuable information, not only in terms of entry or exit. So for example, if you are going to have a trade in that first hour, there would need to be a validation of a pricing pattern, price action, triple top, heading into the open of the first hour for a entry into the market. Now, in most cases, this first collapse is where the market confirms our thesis, but it's the pullback of that first hour entry that gives us our trade into the market. Now, traders who aren't trading in that first hour then can form a thesis or bias as that second hour opens. 1 push, 2 pushes, 3 pushes. 15 false move, 15 minutes takes traders into our major round numbers. 50s and double zeros. Again, go back and watch the other videos. We talk about 50s and double zeros. New hour, 15 minutes into the 50s for our reversal at the low of the day for a 25 plus pip move back up. So the existing first move, first hour trade, 1 hour down that continues for 15 minutes into the new hour, gives us our triple bottom reversal for a 25 pip move back when the new hour begins. Heading into London, again, first hour puts our high in place. The second hour, when London opens up, trades back up into the high for a 25 pip move down before locking in the low. And we talk about 30 to 45 minutes. 30 to 45 minutes. 30 to 45 minutes locks in the high. 35 to 40 minutes in that second hour locks in the low for a third hour trade entry at the end of that second hour back to the high of the day. So understanding, I'm not saying that this is a best trade setup, but the timing of every hour allows traders, if they're trading an instrument, to understand when they may be getting towards the end of a move if they're in a trade, or if they are not in a trade, to form a thesis for the beginning of the new hour, in that equity hour, especially for a trade, either a continuation trade or a reversal trade. Coming back to major round numbers, having an understanding of whether or not the high or low of the day is locked in. Now, I get this question over and over again. The most important thing I can suggest to you, I talked about this in several videos, the 3 hour high and low form your extremes. 3 hour high low forms the extremes. When they break outside of that, so we break outside of the Asian 3 hour high low, we go higher. We go higher. We have not hit a previous day's high or low yet, but we break outside of that Asian 3 hour high low. That means that the high of the day is not yet in place. They're going higher. So traders that are shorting the breakouts of these highs, wondering why they're failing, step back and remember that if they're going higher, that the high is still not put in place. And that may take the next 3 hour session or longer. We have a 3 hour high and low. We have a high that's put in place in that first hour. London puts in the low in that middle hour. The third hour breaks out before putting in our M structure and going into consolidation. Now, I repeat this over and over again, and I know that it kind of glazes over for a lot of people. Most stop hunts are 25 to 50 pips outside of the double zero box. When you understand that, you will understand the importance of realizing whether or not the high or low is locked in, and then heading into the hour prior to our U.S. session, how this now forms our triple top, our head and shoulders pattern, 25 plus pips outside of the 100 pip box for an explosive first hour trade back through the low of the day. So again, timing wise, 1 hour, whether you trade the first hour in this particular case, gave us a great entry in an existing short trade coming out of that last hour of the London window. Or if you waited for the New York market to open up and come back and hit stops on our first hour traders in the third level of rise for a 50 pip trade back down to the low of the day. 1 hour down, 1 hour back up, 45 minutes, our M structure is locked in. So understanding that at the end of that hour, we now have a price action pattern in the last 15 minutes, just heading into the last 15-minute bar of our second middle hour after the New York market is open from our third level for a 1 hour trade back down to the low of the day. Now, obviously, this went a bit longer than an hour, but you're in the money. You're in the money. So keep it simple, traders. I don't care what instrument you're trading. I don't care if it's Bitcoin. I don't care if it's NASDAQ futures. I get these questions all over the time. Does this method work on this? It's not my method. It's how markets work. Time of day, levels, high and low. That's fact on every single market. But time of day can give you peace of mind and clarity when you understand where you're at in that chart with your thesis and your pattern. The time of day allows you to not be guessing and watching little bars going, is that the entry, is that the entry, is that the entry? Pay attention to the clock. 30 to 45 minutes, new hour, 3 levels of rise, first hour trade short, existing broken down market after a 25 to 50 pip move outside of the 100 pip box for an explosive, scalable, short trade setup in both of these trades. Keep it simple. Have a great day. Hopefully you got value from today's video, traders. Again, thanks for a ton of great feedback. May the markets go with you.